Hey everybody, what's going on? Just wanted to make this video to go a little bit deeper into my statistics and my different types of analysis that I have been going over, just to like share the information, and if anyone who ever watches this has any pointers, things that could like help strengthen the strategy, I'm all for it. But today I just wanted to talk a little bit about my ETF strategy that I have going on so far. Just a little bit about it. If you haven't watched the first video, it's an ETF strategy. The reason why it's an ETF strategy is because singular stocks, they move very differently than ETFs. They're more swayed by like earnings, mergers, different types of news, and just different things like that. So their movement is a little more random. The reason why I chose ETFs is because ETFs, they're the average of multiple different stocks. Um, so yeah, one stock might be more volatile than some of the others, but it's the average movement out of all those stocks in different sectors or the same sector. So that's why I choose. That's why I chose ETF to go with it, is because statistically you have a better chance of being able to predict different swings and price movements. With that being said, I do want to touch base a little bit on when it comes to the specifics of the strategy. Today I'll be talking about my QQQ strategy. Now, when I was approaching this, the baseline of the strategy is I look for price movements within the first hour to 2 hours of the market open. And based on those price movements, if it hits a certain criteria, then I enter a trade. But I enter the trade because statistically I have over a 60% chance that I will at least make about 50, not 50, about 20% of my initial investment value within the day. So it's all intraday. It's no swing trades or long-term trades or anything like that. So I would just like to, go over that. But before I go over that, this isn't this grand new idea. Statistical analysis has been regarded, but not as big as technical analysis. But some major traders, they have done research on it, and they live and die by statistical analysis. A big one would be Robert Schiller. He wrote a book about this, and he argued that the mania on internet and high tech stocks. This was around like the late '90s to early 2000s, around the .com bubble. But he said the only way that you could really analyze or explain the mania and the craze would be through mass psychology. And at different universities, they do have different majors like behavioral theories of the stock market and things of that nature. So, I'm not the first one to be like, oh, yeah, we should look at the market in this light. It's already been touched on. I just found it interesting through a YouTube video that I watched a couple months ago, and that got me started on this side of analysis instead of technical. So, yeah, I just, to begin, I want to explain. So, whenever I started this analysis, I didn't have an idea in mind. Technically, I didn't know where to start or what to do. But over time, I did find out different strategies and also different patterns that, face value you won't be able to see. But if you look through, data, you'll be able to paint a clear picture. So I'll just start off. This is my QQQ strategy right now. The reason why I'm using the QQQs instead of probably like SPY or something else, just because they're a lot more volatile. So you do see more occurrences in them over the course of a year. Like I'll show you some data that I did myself for the last 7 months on this, and you'll see what I mean. But for the QQQ, so my entry criteria is 60 cent increase on low volatility days. Not gonna disclose what time frame yet. Like when I see the 60% increase. My stop loss is $1.50 below my entry price. This is not $1.50 below my option price. It's below the stock. I just clarifying that because you could easily get that confused. And these are the statistics that I have for it so far. So 85% chance stock will gain an extra 60 cents after 10 a.m. So that means once I enter the trade and then after 10 a.m. I have an 85% chance that QQQ will go up an additional 60 cents than what it already went up before entry. And same thing, 68% chance it'll gain an extra $1.20, and then 57% chance stock will gain an extra $1.80 after 10 a.m. So these can actually be a lot higher if I closed the time frame. So the time frame where I got these statistics are from 2020 to 2024, the end of 2024. And I included COVID, and the volatility of the market during COVID was very lopsided. So you can account for maybe a few more percentages on all of these if I did take away the data from COVID. But I wanted to include the data for COVID because I did wanted to make it fair. Like if I only did this strategy in a bull market, it wouldn't be sufficient because it would be very one-sided. And same thing for decrease. If I only did it during COVID, the decrease, you would see these being a lot higher percentages, and it just wouldn't be fair. It would be very consensual bias. But the thing that I found interesting between these two, the increase and the decrease, of course the criteria are the same. The reason why is because during the statistics I found that these are very strikingly similar to each other. Like you see on the increase it has 85% chance, and on the decrease you have an 83. So you're only, it's only a 2% chance difference. 68% chance and 69. This is actually 69. If you round it up, it's 68.96. But just for a means of standard deviation, I did bring it down to 68. It could go as low as 64 or 65 if you really want to do that standard deviation formula in it. And this is 69. So you could say these are almost exact the same. And then you see right here 55% and 57. So I thought that was very interesting. Of course, at first, it was hard to believe, but I did test it multiple times, back tested it, made sure that my statistics were correct, and yeah, they're pretty identical. And this started getting me to think about, maybe this whole statistical analysis, mass psychology, human nature, behavioral theories, maybe there is some weight to it. And we also see, I did some statistics on the high of day and low of day. Like you see, you have a 92% chance high of day will occur after 10 a.m. I think it was something like 39 days out of 442 days. QQQ actually saw high of day before 10. So very, very small. It was 8% chance, as you could tell the difference right here. And then for the decrease, you have a 21% chance QQQ hasn't seen the low of day by 10 a.m. So still a very low percent chance that once you enter the trade, you have a very low chance of it going the other way, or it continuing downward or upward. Excuse me. My price targets, I have 120 from entry price and 220 from entry price. I do leave runners anything above 220. You'll see as I go through the chart on trading analysis why I choose the 68-69% chance as kind of like the golden pocket for my personal take profits. It's weird. You'll see when I go through the charting that I did myself. You actually don't see any of these numbers in. You see a few 120s, but other than that, you don't really see any 60s or 180s. I don't want to spoil it, but yeah, it's pretty intriguing when it comes to random price movements on stocks. The reason I say random is, let me pull up a chart that I made. So I went through, all the days that had these decreases and increases, and I wanted to do a little more like statistics on it. So I started asking the question, when do we usually see the low of the day? When do we usually see the high of the day? So the high of the day, this is for the increased days, and the low of the day is for the decreased days. So blue increase, you see the percentage distribution of the high of day by hour. So you see that 9:30, you actually have the highest percent chance. I think I accidentally rolled over not 9:30 but 9-10. So there might be like pre-market highs and things like that affecting this. But for the most part, it's pretty accurate. And then you do see a drop off. Everyone knows like the dead zone between midday. And what was surprising is this. So you see the high of the day 2 hours before market close usually. You could, if you normalize these to 21 days, an average trading month, you can normalize this and say that every occurrence for the QQQ statistic occurrence, you can say 1 in every 3.5 to 5 days. The reason I say 3.5 to 5 days is, again, deviation, just in case. But I'll show you this before I go on to the next part. So this is the low of the days for the decreases. Once again, you see very high percentage of chances for 9:30 to 10, which again, I think it says starting at 9:30, but I think I did 9 to 10 if I remember correctly. But the reason I did that is because based on my strategy, I do look at pre-market and also the first hour, 2 hours of the market. And then again, you see another low of the day. The biggest percentage would be the end of the day, which is around 20, close to 20%, 18%. So yeah, when I do take trades, I do have this in my mind, especially when it comes to certain price movements. So the statistics are all very similar because I found that during certain price movements and time frames, a lot of main ETFs have pretty close correlation. I could give you an example right now. Actually, I traded IWM today. So I entered somewhere right here, and I exited around here, as you see, like the W. Just I had school and things, so I couldn't really pay attention to it. But I knew that IWM, QQQ, and SPY usually have low of the days very similarly when it statistically speaking, and you can see, it like retest goes down, and then you see the low of the day. When is it? 12:05. So you see the low of the day at 12:05, which actually matches up with the low of the day when it comes to QQQ. I do also think that I have the SPY low of the day distribution. Let me just check really quick, just to show you similarities. I probably shouldn't have exited off of that one that I just exited, but maybe we could do it with the other ones. So 1 second, 9 and 10, here you go. So this is for SPY. As you see, very similar. High of the days you see an hour before market close and in the first hour of market open. Percentage of lows by hour. Also, you see a very high percentage chance in the first 30 minutes, and the second highest chance would be an hour before. So it's very, very similar to QQQ. IWM, very similar. And we could go to trading view now. So I just wanted to show you that like very simple statistics. There's a lot more complex statistics I have that solidify this strategy, which I would probably set for or save for another video, because that's a very specific topic and area that we can cover. But let's QQQ's right here, so let's go to QQQ. I haven't charted it for the past month recently, but I do it by quarter. So whenever I go back by myself, because backtesting, you use algorithms, you use code and things like that, and you input historical data, and then you get an average return or overall return through that. But also, what I like to do is I like to go through the chart myself, and just to see, maybe the algorithm missed something or overlooked something. So I like to go through myself, and like I'll show you the results of the last 7 months. It was from end of December to early June, or that's 6 months. So that's 6-ish months. So here you can see, so the bottom of this price range gap, that is usually where I entered, and this is the high of the day. I did, you'll see in the pictures of my notebook, I did average these out. Like, so all the increase days, I got the numbers and then averaged them out. But then I did a conservative estimate, because we're not going to hit the high of the day every single time. We're not catching the high, we're not catching the low every single time. And you see like little price increases like this, 0.69. I actually would count that as a loss, even though you do get some price movement. I did have a minimum of $1.20 based on my statistics. And so anything lower than 120 I would count as a loss. But you'll see, like you can see right here, I got stopped out after this day. Increase, another increase of 136, increase of 125, 214, 208. Then you got a decrease for 19. Got stopped out right here on the increase statistic. Got a decrease of 351. Got stopped out of a decrease. So you get the idea. It's just, went through every single day where I would take the trade, what is the low or the high of the day. And I did this in quarters. So the first quarter that we could go over would be September to December. I'll bring it up right here. Probably make that a lot bigger so you guys can see it. So for the strategies, this is QQQ increase and this is QQQ decrease. So for the increase over September 24th to December 13th, we had a total of 14 wins and we had a total losses of 7. So 2-to-1 win rate. But for green days, out of these 20 green days and 1 red day, the reason why I do green day and red day is I do have a statistic percent chance of if it's going to end a green day or a red day based on an increase or a decrease. So that's why I do mark that, and it does align very well with these statistics overall. Each of them is like, if I enter an increase, you have a 83% chance it'll end as a green day, and for red day it's slightly lower at like 78% chance. But let's get back to reading this. So the average win increase, this is, you get all the data from every single win and then you average it out. Increase, it just means the stock price increase, it doesn't mean option. So the stock went up an average of $2.92 over these 14 wins. And then I did a conservative estimate because, again, we're not going to catch every high or catch every low. So I dropped it down by 60 cents. And then for contracts, I did an average of different Greeks for options, because I looked over the typical Greeks for QQQ contracts, and then I did a rough estimate of around $417.60 per win. And then per loss, our stop loss is $1.50 from entry price of the stock price. And you do 4 contracts, and estimate is $200.70. That could go from $250 to $300. It really doesn't matter. I just met in the middle. But you see the net, or not the net, the gross profit for these 14 wins were $5,846.40. And the gross loss was $1,890. And that left us with an average net profit of $3,956.40. So I think that's actually very good, because 4 contracts usually only cost around $1,200. So you're making almost $4,000 off of only betting $1,000 at a time, which is pretty good. And you're making a little bit over 30% of your initial investment. So we could go back down to the decrease of the QQQs during September to December. So we see it occurred 12 times and we lost 7 times. And out of all these total days, red days, there were 16 of them. Green days, there were 3. So you have an average win decrease. So how much on average the stock went down per trade is $3.67. I did a conservative estimate and I dropped it down by 65 cents. And once again, estimated for contracts. So the average profit would be around $543.60. And again, stop loss is the same, so you do have around the same loss. So the gross profit from September to December would be $6,523.20, and the gross losses would be $1,890. So you see that the net profit for the decrease is $4,633.20. So this would put you around altogether a net profit of around $8,500 estimate, and that's pretty good. That's pretty good for 3 months. Only trading 1,200 at a time. That's around 2,400-500. Don't quote me, a month. So this was really good. QQQ is by far the most profitable strategy out of all the ETFs. But then we could backtrack to September to June. So September to June, increase had a total of 19 wins. And you do see my 120 minimum. If it's not over 120 in price, it counts as a loss. So a lot of these could be break even, but I want it to be as harsh as possible when it comes to estimates to make it realistic as possible. So we had 19 wins, 15 losses. Out of those days, green days were 26, red days were 8. You see that the average win increase did slightly become bigger at $3.16, which I then took off 56 cents. Sorry, yeah, 66 cents. Sorry, and got the average profit of $4.50. And for this quarter, I did make the stop loss smaller just to test it out, just to see how profitable it would be. So the average loss is around 180 to 210. But you do see that the average win, or the gross win for the increase over that quarter, is $8,550. And then the average, or the gross loss, is $2,700. So we did have a bigger loss because of how many losses that we endured during this quarter, but thankfully our average win was so big that we were able to negate some of the losses and actually come up with a net profit of $5,850, which is a lot better. It's bigger than both of the net profits for the fall quarter, so that's good. But here is one of the best parts about trading: is you will have bad weeks, months, quarters, but you'll also have really good ones too. And from like the summer quarter, June to September, this was a really good quarter. So let's go to the QQQ decreases. So you do see the wins at 17. I did count one that was lower than 120, so this is why you see 7 over the 8. And 17 wins, 5 losses, 4 green days, 18 red days. Now, the average win decrease was $6.04. $6.04. I did take away over $1 on this conservative estimate, just, because if I took away 60 cents, I don't think it would be realistic. But, with the contracts and the estimate, it comes out to $828 of profit. And the stop loss was 150, so this is the average loss. You have a gross profit of $14,076 and a gross loss of $1,350. So this brings your net profit to $12,726. Altogether, this would put you around $18,000, $18,500, and that is phenomenal. $18,000 in one quarter. That's around $6,000 a month, and you're still only risking $1,200 per trade. You're not even risking that because of your stop loss. You're risking around $300 max per trade. And I could show you others like SPY and my IWM ones, but I was thinking about just separating them each into different videos and not, compiling, because I did record this before I had to go to class, but it was like an hour long, and when I clicked to export it, I don't know, my OBS went pretty crazy and it kind of just crashed. But yeah, I could talk about a few different things really quick. So, during this ETF analysis, I started getting into futures analysis because I do know that, they have a SPY futures and a NASDAQ futures and all that. And I was seeing if I could find any correlation between the two in certain price movements and certain time frames, because if I can, find very close correlation to these two, I can mirror, or not mirror, I could just transfer, my ETF strategy to my future strategy. So, I bought some of the futures historical data, and what I found was pretty crazy. I don't, this might be common knowledge, this might be not. But here is a graph of the ES mini futures and SPY. I did it as they each had a starting point of 0. The reason why is because the SPY mini futures are a lot more in value than the SPY ETF. And I did it based on, percentage change, price movement, and things of that nature. And as you can see, it's pretty identical. This is what I don't have on the chart is telling you what specific time frames from each day that it's actually tracking. But the correlation out of an absolute value of 1.00, the correlation came back to 0.98. So basically pretty identical. And I have taken one trade based on this, and it did work out. The only thing you have to do is find the difference. So for SPY, like let's say for example my entry criteria is 50 cents. I have to figure out what that translates to per tick on the ES mini futures, which is pretty simple. You could probably just look up a calculator, chat GPT it. But yeah, and just to make sure, I did do a series of scans per day. So the top is futures and the bottom is SPY. And you can see that the futures do lag behind the SPY during this time frame, which is good because if you're entered into a trade in SPY and let's say your stop loss got triggered or something, you can actually wait on the minis and wait until maybe it goes up, hits, and comes back down to enter a trade. So it's kind of like foreshadowing, which is really nice. But yeah, it's pretty much very simple. I just want to show some simple statistics. I don't want to get, like I said, into the concrete and very complex ones yet. I will make a video on them, but just giving you an idea, basically, of what I was looking at, what I found when it comes to these statistics. And I can show you guys one more thing. Sorry, I don't mean to gatekeep all this stuff. I am still working on this myself. It's almost complete, but there's still a couple things I need to do. What I wanted to show, so my wife, she brought up a good point, and she was like, did you put it through any stress tests, statistical tests? And really, the only thing I did was standard deviation. And it's like, no, I haven't, I should though. So I put it through a series of tests, this strategy, just to make sure that it is concrete and there is a statistical edge to it. So I'll just show you. So I put it through 10 different tests. The win rate test would be 76.81, very simple test. Average return you see at 127, same thing as expected value. This is why my price target number 2 is 120, and that is why it is the golden pocket for me. Sharp radio, just risk adjusted performance 1.07. T statistic, this is highly significant. It's basically on a scale of 1 to whatever, and the closest it is to 1 means that the better statistical edge you have compared to random chance. P-value test indicating statistical significance, same thing as a T statistic, actually very similar, near 0. So, and this one is near 0. Chi-squared statistic, showing strong deviation from random chance. once again. Randomized win rate. I forget what randomized win rate means, but it did drop significantly to 48.79%. This is like one of the concerns I had, but also I did the statistics on this and profitability, and it did still come out pretty profitable per quarter. Train win rate 77.98. It's just training the algorithm. So it did increase about a percentage. And then my test win rate. This is, so they took all the data I gave them. Like they kind of like mashed up the days. Made their own charts and things of that nature, and still ran the algorithm through that. And the test win rate actually came to 74.26%, and that is pretty awesome considering this is all unforeseen data. And at the bottom it says, this strategy appears robust with statistically significant results and minimal signs of overfitting. So that's very, very nice. That's probably what I'll end off on for this video, is just the results of my statistical formula tests, just to show that it is strong. It has been tested. I have been trading it for the last week and a half. Not great results, but it mostly falls on my end. Just not enough discipline, or lack of awareness, or I just forget things. So I will make a video going over that. I'll probably make a video every week going on just reviewing the week of my trading, what trades I took, if it was net positive or a net loss. But yeah, sorry for babbling. Hope you guys enjoyed. Sorry for my dogs crying every now and then to go outside. I was hoping they stayed quiet this whole time, so hopefully you didn't hear them that much. But yeah, I don't know when I'll upload the next two videos. One of the videos, like I said, will be going over my week of trades and things like that. And then the second one will be going into a deeper analysis when it comes to the ETFs. So I'll probably do SPY next. SPY, have a lot of data analysis for SPY, just because it was the first one I worked on. But yeah, hope you guys enjoyed. See you in the next one. Don't know what else to say, but hope you have a good day.